हाँ, तो एक बार अभी ये रुक जाएगा। अब ये जैसे करने वाला था ना इंडिया इनको भी, तो
क्या है, जैसे वो ब्रिक्स में डॉलर के करेंसी ले आएंगे डॉलर के बराबर, तो वैसे ही हो जाएगा उनको।
हाँ वही है।
तो डॉलर के बराबर बस वो यही चाहता है, ब्रिक्स कोई करेंसी नहीं निकाल देगा, तो क्या तो वही लगा हुआ है।
सही है, वही है।
ठीक है, हाँ।
ठीक। हेलो।
हाँ,
ओटीपी आए हुए हैं, को भेजिए।
एसोसिएट लॉगिन आ रहा हूँ, बिल विल जमा
अच्छा,
करना है।
मेल पर आरसीबी को तो ओके 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 ओके।
दोबारा से कर लो।
नहीं नहीं नहीं, हो जाएगा। अच्छा 2 मिनट होगा।
हाँ,
भेजो भेजो भेजो, मैं मैसेज में देख रहे हो।
फिर
बजट की सेमिनार है, कर सीखे चलो।
हाँ, रुक जाएंगे।
नहीं नहीं, जस्ट डड्डा की।
कौन सा कर दे?
ला तना लिंक भेजूंगा। ओटीपी आएगा ना?
हाँ, देखो एक बार भेज दिया।
हाँ।
Good morning, everyone. We'll be starting in next 2 minutes. So I would request all of you to please keep yourselves on mute. Also, we will be going live on YouTube. We will be sharing the link with everybody in a few minutes. Good morning, everyone. Okay. We're now starting the session. Good morning, everyone. I am Shefali Jain Pang, part of Dada and Company and DSM Alliance. Thank you all for joining us. So, we have come up with this special session on the budget 2025, which was proposed by the Finance Minister on 2nd of Feb 2025. So, this budget has been very exciting in multiple facets. Changes have been proposed in both direct taxes and indirect taxes. Though the changes in the GST were round the corner since they were all discussed time and again in the GST Council meetings, but the changes in direct taxes have been a little exciting for everybody, precisely for the middle class audience. However, the key takeaway of this was the retrospective amendment in Section 17(5), which was an attempt to nullify the judgment of Apex Court in the case of Sapari Retreat, which shall be discussed in this webinar in detail. Further, there have been several rate amendments in customs, which will also be discussed in this session. And of course, a lot of other changes have been proposed in direct taxes, which will be addressed by our experts of direct taxes. So this webinar shall cover the key amendments in direct taxes, which will be addressed by our senior partner, CA Yash Dadda, and our DSM Alliance partner, CA Rishabh Singhvi from Bengaluru. And further, the amendments will be later discussed on direct taxes, which shall be addressed by our partner, CA Mudit Jain. So we hope this is a very enlightening session for all of you. I request all of you to please keep yourself on mute. If there are any queries, they'll be addressed in the end. And I now request CA Yash Dadda to please take over and begin with the session.
Thank you so much, Shefali. Good morning to all the participants here, and on behalf of DSM, we welcome all of you, and we are thankful that on a Monday morning, you have taken out time from your official duties to be here and to be a part of this, our analysis in respect of the proposed amendments in direct taxes and indirect taxes in Union Budget 2025. Shefali, you will have to allow me to share the screen.
Just one thing, sir. We're also live on YouTube. So if at all anybody is having any problem in joining this webinar, they can also join us through YouTube. The link will be shared on the WhatsApp.
Okay. So, as a brief background which was given by Shefali, and I'm sure all of you on this weekend, when you would have heard the budget speech and the subsequent discussions after that, one unexpected change which came, which has been welcomed by almost everybody. And in fact, on social media, you would have seen the pictures that after the budget speech, our Honorable Prime Minister, along with the other members of the Parliament, went up to the Honorable Finance Minister. And the manner in which what we could see from the visuals, the Finance Minister was congratulated for the very reason that the exemption limit, which was increase in income tax, that has been seen as one of the key highlights, and because of which the general consensus is that it was beyond expectation, which has been given by the government, what all of us probably could have, what we were thinking. And because the general consensus was that the basic exemption limit had to be increased, but an increase beyond the amount of 10 lakh rupees and going all the way up to 12 lakh, and somebody having a salary income of 12 lakh 75,000, it came as something which was not expected. Though I am not talking in detail about the direct tax provisions, and Mudit will take us through them, but it kind of gave us the sense and the way, the manner in which the government has thought this through. And there is a background to this. Specifically, all of us who are tracking the economy at a macro level, or we would have seen what has happened in last 6 months or so, especially when this Modi government came for the third term, and this being the first full blood budget being presented by them, we are in a situation where our growth has declined as compared to what was there in the previous year, though still we are the fastest growing economy in the world. But in order to achieve the dream of Viksit Bharat by 2047, and when we say the dream of Viksit Bharat, that dream is specifically when the per capita income is more than 20,000 US dollar. So having that dream, and to achieve that, we need to grow much beyond the growth rate at which we are growing. And in that respect, consumption or the domestic consumption has to increase. And for that to increase, it is very important that our middle class, which contributes in the major chunk in terms of consumption, they need to have amount in their hand. And for that, this has been seen as one of the reasons where in fact, in the post-budget discussions also, it was being said that approximately 1 lakh crore would be the amount which would be which would actually come in the economy, in the Indian economy for the in terms of consumption. And then it is going to have a multiplier effect, and that multiplier effect will actually boost the economy and the GDP will increase. Having said that, the counter impact of this is going to be that in the case where the consumption is going to increase, the inflation is also set to increase. Because as in when the consumption would increase, the demands are going to increase, and then it will have an impact on the inflation side also. Now, how that balance is going to be maintained in a sense that at one hand, I may have a saving in terms of income tax, and on the other hand, I may have to spend more to buy the respective goods or services which I would like to look for and buy from this in this savings which I'm going to have would determine that where the Indian economy or how Indian economy is going to take this up. So in that sense, this is quite interesting. This is something which was unexpected, and let's see that how the dice, how it is going to be rolled in the times to come. Our topic to start with is going to be the provisions which are proposed in indirect taxes, both in GST and some of the relevant changes which are there in customs, which I understand that all of us are, all those who are dealing either into exports or in imports, you will be benefited out of the relevant key changes which have taken place in custom laws also. And I have the August company of Rishabh Singhvi with me. I cannot see Rishabh on screen. If Rishabh, yeah, I can see Rishabh now. So Rishabh is also there with us. And while we will be discussing about the GST and the customs provisions, I and Rishabh will try and discuss some of the key aspects or some of the issues which will come up in terms of in terms of that in what background the proposals have been brought in, and what impact is going to have in the times to come, and some of the strategies as a business entity which we may look at while planning our affairs in the times to come. Two, three things from the economic survey which I thought would be relevant for us before we really go into and look into each aspect of indirect tax. Some interesting things which were when the economic survey was tabled on 31st of January 2025 on the table of the parliament. Some interesting things which gives us an idea that how was the report card of our country in the past 1 year, and what has been the economic indicators both at the global side of it, and how is our country looking at it. So one of the things which was mentioned in the economic survey was that the global economy has grown by 3.3% in 2023, and it is projected to go somewhere around the same rate in 24 and 25. And in this growth, the contribution or the maximum contribution has come from the service sector, whereas the manufacturing has actually reduced, and there has been a contraction worldwide which has been reported at the manufacturing side of the activities. Specifically, when we look at the geopolitical situations where to four major countries in two separate war type situations which are there, which has impacted the prices overall. Because of that reason, though the inflation overall all over the countries, it has remained steady or it has been on the declining trend. But because of that geopolitical situation, it has actually been compensated negatively because of that situation which is there. Now, in that global trend, with the numbers which we have, when we look at our India's macroeconomic trajectory, we have grown by 6.4%, and it is lesser than the growth which was projected. It is lesser than the growth which was there in the previous years. And when you compare it with when you read this with other economic indicators, in terms of what is our position of Indian rupee, when you look at it from the perspective of how our stock markets have been on the declining trend, specifically in last 2 months or so, and when you look at the situation of the unemployment numbers which are there, to an extent that we may believe that these numbers are correct, we understand that we are not in a situation which we would have preferred to have been, considering the terminology of Amrit Kal, which was coined by the government last year, or in terms of the growth trajectory towards the Viksit Bharat. Having said that, some very interesting sectorial performances or sectorial numbers which were given in the economic survey, and one of that which actually caught our attention, that the economic disparity between the urban population and the rural population, that has reduced over the period of time. In fact, when you would compare it on a decade to decade basis, there has been a drastic change. And that is something in terms of direction for somebody looking to set up an industry, somebody looking to cater a new market, considering that now can they really shift their focus, or can they really look at the rural economy as one of the major consumers of the products, or they may look at as the tier 2 or tier 3 cities as one of those cities where they may consider setting up their base, is one thing that comes up from this indication of the disparity which has reduced between the urban economy and the rural economy. Okay. Two other things which may not be indicative of economic numbers, but it indicates as to specifically for all those who are present here, and I understand that majority of us are from a taxation perspective, majority of us from a taxation background, and or from an accounting background, or from the legal side of it. We have seen that day in, day out, our majority of the activity is in front of this computer or the laptop or any related technology. In fact, we are connected through Zoom, which is also a virtual platform. So, and over the period of time, artificial intelligence is one such term or a phrase which has been buzzing, and all of us have been listening about it. And this is something about which all of us have kind of agreed that this is going to be the next big change which is going to hit us. In some of the industries, it is already in place, and it has started displacing lot of the beliefs which are there traditionally, lot of the activities which we were doing traditionally. In the economic survey, there is a complete dedicated chapter for artificial intelligence, where some of the things which we have already seen are specifically mentioned. Like, they've specifically said that the major tech firms are investing heavily in artificial intelligence. In respect of China, we would have read news 3-4 days back, just before the budget, that they have now come with their own ways to counter the chat GPT and the open AI, which is much more cheaper as compared to the amount which are invested by the US based artificial intelligence entities. From a job perspective, and that's where a survey was being conducted in across the board in respect of various industries, where in 4 specific areas like healthcare, finance, education, and criminal justice, people were asked, and 68% people said that majority of the activities which they are doing, either they are completely automated, or they're partially automated, or they will be done in the times to come. And 40% people actually feared that AI is going to actually make their skill set redundant. in a sense to say that whatever they know, whatever they do, or whatever they have learned over the period of time from their experience and through other ways of learning, artificial intelligence may actually make it redundant. Whereas you compare it to other people who have adapted, who have learned, or who have upgraded their skills in terms of how to use artificial intelligence in their work. If you compare their salary structure, if you compare their remuneration structure and the return which they have on the basis of the activities which they do, the economic survey suggests that approximately 13 to 70% salary premium is there for all those who have actually employed all these skills in their working activities. And one very interesting thing again which caught our eyes was that in the economic survey, one of the suggestion which is there, that how should one counter this, because ultimately at the end of the day, if the artificial intelligence is going to cost us going to cost the jobs, then in that case there should be some law where all those who would use artificial intelligence to a greater extent and would be earning profits out of it, some type of taxation may be implemented or some type of taxation may be imposed on them, so that there is going to be a level playing field. So this kind of gives an indication that now we are at the doorstep where we cannot turn our back towards the artificial intelligence and just speak about it, but rather we have to actually embrace it. On the complete opposite side of the spectrum, in the economic survey, there has been again a detailed discussion about the working hours. And I'm sure again, this is something which through social media, through the statements of the leading industrialist in India, this was in discussion that how many working hours should be there in order to make India a developed economy. As Indians, how much we are supposed to actually invest our time. And there, the economic survey says that anybody who's spending more than 60 hours in a week at the workplace on their desk, they are bound to have a mental health which is deteriorating, and their well-being is actually suffered negatively if they have long working hours. On the other side, there has been a concern which is raised in terms of our generation, which is now growing up with the internet and specifically social media, and there is specific reference of social media in it, where they've given reference to one of the books called Anxious Generation. And they said that the people who are now growing up using this technology day in, day out, their childhood is completely rewired as compared to some of like us, where in our childhood we did not have so much exposure to social media and technology. So why I'm bringing these two slides, these two slides takes us to two extreme sides of the spectrum. At one, we are saying that we have to embrace artificial intelligence in terms of that we have to invest our time and money in understanding it and adapting it in our day-to-day life, and specifically at our workstations. And second, they're saying that all those are investing too much of time in using the technology and too much of time actually sitting in front of computers or laptops, their mental health is impacted negatively. So in a funny way, if I may look at it, at one slide, probably we are talking about this, and at the other slide, we are talking about this. You would look at the right hand side, this person who is basically working on the computer, he has 3 hands. And again, there probably our own wisdom comes in, where we have to look at and we have to try and look at how to maintain the balance between these two, so that not only at the work front, but otherwise we would see a lot of satisfaction and we are able to actually appreciate other things around us. Two things before again we go to the specific provisions. Now, specifically in terms of GST, you would look at it. Economic survey has done in terms of GST, two things which they have specifically mentioned, that year-on-year growth of GST has been not very exciting. And when I say this not very exciting, in absolute numbers, GST may be growing, and that growth has now reached to a bare minimum absolute number, where at the starting of the GST it was being thought that whether we'll be able to reach that number of 1.5 lakh crores or 2 lakh crores per month. But when you look at in a comparison with the GST ratio to the GDP ratio, those numbers are not exciting, or those numbers are not encouraging. And when you compare it with the another metrics, the metrics which you see on your screens, that metrics that the state governments, when they have their own set of revenues, so GST, and apart from GST they have other sources of revenue, which is land tax, stamp duty, and state excise duties, you would see that in approximately 23 states, GST contributes more than 50% to the exchequer's revenue at the state government side. When you look at it from a Rajasthan perspective, for example, if I talk about my state, then in Rajasthan, that number is approximately, that percentage in the total revenue is approximately 35 to 40%. Now, when a state government has so much of a revenue dependence from one source, and that source is GST, then you compare it with the type of notices which we get, the type of enforcement actions which we have, the type of questions which are being asked by the audit or the scrutiny. Probably from a other side of it, will be able to understand that why for them so much of a scrutiny or so much of questioning is required, because this is one of the major sources of revenue for the government, and this number they cannot afford to basically lose out in terms of that, whether what is the industry's reaction to the action taken by them. In spite of this, the economic survey does agree that because of GST, specifically on MSME, there has been an increase of compliance burden. That's point number one. And number two, there has been a blockage of working capital. And all those again who are reading economic survey over past 5-6 years, at least what I have done, I have seen this observation has consistently been there almost in all economic surveys, that because of GST, MSME has to put in extra money in terms of making this GST compliance, that it is cumbersome. And second, because of increased GST rates as compared to VAT and excise, the working capital blockage is there. So apart from all other observations which are there, this observation in the 8th year of GST economic survey does acknowledge that these two problems are one of the perennial problems which people are facing. And probably in recent past, the enforcement action which has been done by the department side of it, that may add to the worry of for all those who understand that GST is a little bit of a complicated tax. Now, with this, I come to the specific provisions under which the changes are there. First, we'll take GST and then we'll take customs. In GST, we always repeat this and we always say this before we really look into the budget provisions, that our Honorable Finance Minister does not speak anything in terms of GST when she is proposing the amendments in the taxation, be direct or indirect taxes, for a very simple reason, that we have a constitutional body called GST Council. And the structure of GST is like this, that whatever recommendations, that whatever changes are there, either in law or in procedure or in GST rates, they have to be first recommended by the GST Council. And because in GST Council, it consists of the central government and the respective representatives from the state governments, so the decisions are by and large taken in the council meetings. Last council meeting happened in Rajasthan, in Jaisalmer, in the month of December, where lot many decisions were taken. And out of those decisions, wherever there was a requirement to change the law, all those proposals or all those recommendations have found a place in way of a proposal for changes in the CGST Act. So that is why in budget we may not hear much about GST, yet through GST Council meetings we kind of get an understanding in what sense the changes are taking place. In the last council meeting, one of the things which became again on social media a talking point or in this meme culture that gave a lot of input was the change in tax rate on popcorns. Now, why am I bringing this? I'm bringing this just to explain that there are two sides to every story. From a consumer side, if I may look at it, and somebody would tell me that popcorn, if it is unbranded or it is branded or it is consumed at a restaurant, or if that popcorn has caramel, it is going to have four different rates. I would definitely, if somebody would ask my opinion, I would say that this appears to be bad planning for a very simple reason that if the commodity is same, the tax has to be same and uniform for the sake of compliance and also for the sake of simple understanding. So if you look at from the other perspective of it, from a government perspective, government says that unbranded popcorns, that popcorns which do not have any brand name, the tax rate is 5% there. Why 5%? If from a government perspective, that all those who are selling unbranded would generally be MSME or small suppliers, and there they may not have the capacity to actually increase their prices if the tax rate goes up. And that's where government wants to actually give an incentive, wants to actually support them, and that's why the rate of tax on those eatable items is lesser, that is 5%. Vis-a-vis compared to a player who is registered and who has his own brand name, and he's not only just selling a popcorn but selling a popcorn under brand name, so it is understood by government that person may have a capacity to actually increase the price and still he'll be able to actually retain the customers, and that's why the rate of tax there is little on the higher side, that is 12%. Now, the most interesting part is that if the popcorn has caramel, then the rate of tax is 18%. And why 18%? So the answer to this there is in the economic survey. There is one chapter in economic survey where they're talking about the mental health. So there is a reference to the physical health of the citizens also. And it is being said that the sugar consumption is one such thing where government would want that people should not actually consume ultra processed food and all those which has high sugar content. So apart from all other ways which is available with the government so as to actually encourage its citizens to maintain a good health, one of the suggestions is to increase the tax rate. And that is why you would see that in the press release, in the press conference also, our honorable finance minister in one of the discussions said that because it has sugar content, the rate of tax is 18%. So it is not that government only wants to confuse the consumer or all those who are doing a tax compliance, but that's the reason behind it. And last, why if I eat this caramelized popcorn or any other popcorn in a movie hall or at a restaurant or a cafe, it is 5%, because under law it is treated as a service. So what I'm trying to explain is that from at one slide, all of this looks very complicated, and one may try and look at it why it is so complicated. But if you really go back and look at from a government's perspective, the government perspective may at least give us some idea that there is a reason behind having these four rates, though the implementation still may still not be proper. It again, at the end of it, if it creates a khichdi, that khichdi may not serve anything, and it may not help the government also in collecting the taxes, but that's the reason behind it. Anyway, now we come to the specific provisions, and here I would seek the inputs from my partner and a dear good friend Rishabh also, wherever required. So we'll first look at a very small change, but the purpose of bringing it here before all of you, all those who are dealing with an entity which has a multi-state presence in GST, and we know that if I have more than under a single PAN, if I am present in more than one state, I am supposed to take separate registration each state wise. That's where in the last budget in 2024, it was being proposed, and finally it got converted into an act where it was said that if I'm receiving services at one of my GST registrations, and if I'm not consuming service at that particular registration number, but that service is for the overall benefit of my entity, then in that case, it is now going to be mandatory from 1st of April 2025 that I take a separate and an additional registration called as ISD registration. And that ISD registration I have to use for the purpose of receiving the invoices at one particular location and distributing it to my other locations which are under the same PAN. Before this, there was confusion that whether ISD is mandatory or optional. So at least in the last budget, it was made very clear that it is going to be mandatory from 1st of April 2025. Now, there was one more change which had come up, that all those who are already having ISD registrations and who are doing ISD compliance, they would know that an ISD as of now today is not competent to pay tax under reverse charge and claim credit of such tax paid under reverse charge. So there was a confusion as to how ISD is going to do an RCM credit distribution compliance. So when the last year change came, they specifically mentioned that you'll be able to actually claim the credit of tax paid under RCM also under ISD. The problem was apparently there was an anomaly that they only talked about RCM paid under CGST and SGST, and RCM to be paid under IGST was not mentioned. तो वहां पर एक कंफ्यूजन था कि क्या IGST के अंदर अगर मैंने कोई RCM पे किया है, so whether I'll be able to take that credit or not take that credit under ISD, और क्या मैं उसको distribute कर पाऊंगा. In this budget, that anomaly it has been taken care of. Or if I am paying tax under RCM under IGST also, where there is an interstate supply just pay as a receiver, I have to pay tax under reverse charge, I would be required to pay under the ISD registration, and then I'll be able to claim credit of it. So that is one small change. It just corrects the anomaly which was there. But the purpose of keeping it here and bringing it in front of all the participants are that we have to now, we are now standing on 2nd of February. From 1st of April 25, ISG is going to be mandatory. So we have to go back and look at our books of account, see to it that whether we have more than one GST registration under a single PAN. If we have so, then generally we are going to have one of the GST registrations treated as a head office or the main office where all the invoices in respect of services are received, those services which are for the benefit of the complete organization. And then we have to see to it whether we are structuring it properly and distributing it through ISD mechanism or not. So because ISD requires a separate return to be filed apart from GSTR1 and GSTR3B, which you file in a regular registration. And from that ISD return, our credit would come to the respective GSTR2B of the recipient states, and then we'll be able to basically use it at the receiver state. So this is one compliance which is important. And this budget, it only clears the doubt which was there. But importantly, from 1st April 25, we have to take care of it. Now, let's talk about the most important change which is proposed in this budget. That change which has a widespread impact, and that change where government has kind of brought their intentions very clearly, that if there is some legislative intent, then government, whether do they have power to enforce that legislative intent by not just by changing the law, but changing it from a back date and going against the judgment which is being delivered by the apex court, that is the Honorable Supreme Court of India. What is the background? I'll first explain the background, and here we'll take inputs from Rishabh Bhai also. जिन लोगों को बैकग्राउंड नहीं पता है उनको सिर्फ बैकग्राउंड बताने के लिए, मान लीजिए I want to construct a building, and when I have to construct a building, obviously I would need material and I would need services also. So let's say I buy some material. One of the most important material is, let's say, cement. I take services also, services of labor supply or masonries for construction purposes, architect services, designing services, and whatnot. I use all of these goods and services and I start constructing the building. and building comes to a shape which is in a skeleton form or otherwise. Now, जब हम कोई भी रियल एस्टेट कंस्ट्रक्ट करते हैं and during the course of that real estate construction, if my purpose is to sell that real estate or to actually advertise it to the outer world that I want to actually commercially exploit this and sell it in the market, then I have to take a RERA registration. So RERA is a separate act which tells me to take registration. Under RERA, there is a concept of getting a completion certificate. Even if, let's say, I do not have a RERA registration, under the specific local laws, I have to take a completion certificate. GST law says कि अगर आप एक बिल्डिंग कंस्ट्रक्ट करवा रहे हैं और वो करके अगर आप उसको बेचने वाले हैं कंप्लीशन से पहले, then in that case you have to pay tax on that construction services, और आपने पीछे जितने भी goods और services को यूज करा है, you can claim input tax credit of it. There is absolutely no problem. However, we know that there is a list which is called as a block credit under 17(5) of the act, और 17(5) जो है उसके अंदर दो specific provisions हैं जो कहते हैं if you are constructing the immovable property और आप उसको बेचने नहीं वाले हैं, I'm just simplifying it, that what is the, how is government looking at this. So government says कि वो block list के अंदर दो provision है, वो बोलते हैं कि अगर आप उसको बेचने नहीं वाले हैं completion से पहले, तो आपने जितना भी मटेरियल और सर्विसेज यूज करी है उस पे यू कांट क्लेम द इनपुट टैक्स क्रेडिट. Now, for all those who are actually constructing this building and are not going to sell it, but actually going to rent it to a third party, they had a problem with this. And they said, we are being put at a disadvantageous position because I am going to construct the real estate and I am going to actually give it on rent, bring tax to the government through on that renting activity. तो मुझे भी input tax credit मिलना चाहिए. And that's where they interpreted one of the provisions of the act called 17(5)(d. 17(5)(d) में उन्होंने बोला है कि जो प्रोविजन जो क्रेडिट रिस्ट्रिक्ट करने की बात करता है, इसका इंटरप्रिटेशन ये होना चाहिए कि चाहे आप बेच रहे हैं या आप किराए पर दे रहे हैं, अगर आप इमूवेबल प्रॉपर्टी को इस्तेमाल करके यू आर ब्रिंगिंग टैक्स टू द गवर्नमेंट, देन यू आर एंटाइटल्ड टू क्लेम द क्रेडिट. And some of the people who are basically dissatisfied with the interpretation of this provision, they went to the High Court. तो ये मैटर गया उड़ीसा हाई कोर्ट. उड़ीसा हाई कोर्ट ने एक फेवरेबल डिसीजन दिया एसएससी के फेवर में. उन्होंने बोला कि आपको इनपुट टैक्स क्रेडिट मिलेगा इफ यू आर गोइंग टू यूज इट फॉर रेंटिंग ऑल्सो. ये प्रोविजन को थोड़ा नैरो तरीके से पढ़ने की जरूरत है. एंड दैट नेम ऑफ द जजमेंट वाज सफारी रिट्रीट. सफारी रिट्रीट के साथ साथ और भी, नॉट ओनली इन उड़ीसा बट अक्रॉस इंडिया, बहुत सारे लोगों ने रिट पिटिशंस फाइल किए अक्रॉस हाई कोर्ट्स. जीएसटी डिपार्टमेंट उड़ीसा हाई कोर्ट के जजमेंट के अगेंस्ट में सुप्रीम कोर्ट गया और सुप्रीम कोर्ट ने सारे मैटर्स को इकट्ठा करके मैटर सुना और सुन के अक्टूबर 2024 में एक जजमेंट डिलीवर किया. दैट वाज अगेन दैट सफारी रिट्रीट जजमेंट वेयर सुप्रीम कोर्ट सेड दैट you will be entitled to the input tax credit of an under constructed building. और वो जो डिसीजन दिया सुप्रीम कोर्ट ने, उसके पीछे का सुप्रीम कोर्ट का रीजन ये था कि लॉ में जो ड्राफ्टिंग हो रखी है, वो ड्राफ्टिंग में जिस प्रोविजन में एसएससी क्रेडिट लेना चाहते हैं वहां पर एक एक्सेप्शन दिया गया है, इमूवेबल प्रॉपर्टी का क्रेडिट नहीं मिलेगा, उसका एक एक्सेप्शन है. एंड दैट एक्सेप्शन इज इफ यू कॉल दैट इमूवेबल प्रॉपर्टी इज प्लांट और मशीनरी. तो इंटरेस्टिंगली प्लांट और मशीनरी का डेफिनेशन लॉ के अंदर नहीं था, तो सुप्रीम कोर्ट ने उसको अपने हिसाब से इंटरप्रेट करा और सुप्रीम कोर्ट ने बोला दैट इफ यू आर एबल टू प्रूव दैट योर बिल्डिंग इज कंस्ट्रक्टेड इन ए मैनर दैट यू आर गोइंग टू यूज इट फॉर गिविंग द आउटपुट सर्विस, तो आप उसका एक फंक्शनैलिटी टेस्ट कराएंगे. एंड इफ यू सेटिस्फाई द फंक्शनैलिटी टेस्ट देन यू आर एंटाइटल्ड टू द इनपुट टैक्स क्रेडिट. So once Supreme Court said this, suddenly all under constructed buildings on the basis of judgment, which were built not for the purpose of selling it, but which were built for the purpose of actually giving it on rent, or maybe use it for the purpose of warehousing activity, or maybe it is used for the purpose of running a hotel, or maybe used for running a cinema hall, or whatever it is, they actually got a benefit. And the Supreme Court judgment interpretation was that now they will be entitled to the credit. उसके बाद दिसंबर में 55th जीएसटी काउंसिल मीटिंग हुआ. 56th जीएसटी काउंसिल मीटिंग में काउंसिल ने ये डिसाइड करा कि ये जो प्लांट और मशीनरी जिसके बारे में सुप्रीम कोर्ट ने बात बोली है 17(5)(d) में, ये एक ड्राफ्टिंग एरर है. हमने ऑलरेडी कानून में प्लांट एंड मशीनरी का डेफिनेशन दिया हुआ है. So if you're not aware about this background, you may again note that Supreme Court interpreted plant or machinery. In GST Council, they said that we have already given a definition of plant and machinery, और ये and और जो भी है, it appears just to be a drafting error जिसको हम ठीक कर देते हैं. And let's not only correct this from going forward, let's correct it from 1st April 17, because our intention was very clear कि प्लांट एंड मशीनरी की डेफिनेशन में कोई भी सिविल स्ट्रक्चर नहीं आएगा. सो वेयर एवर आई एम कंस्ट्रक्टिंग अ सिविल स्ट्रक्चर, it will not be included there. And that's where government said that we're going to change the law retrospectively, and that's what they have done this in this budget, where they've said that whatever plant or machinery was written in 17(5)(d), you read that as plant and machinery, and we have a definition of plant and machinery in section 17 only given, which says that it will not include a civil structure. और ये लॉ को रेट्रोस्पेक्टिवली बदल दिया, मतलब प्रपोजल है रेट्रोस्पेक्टिवली बदलने का. इसके साथ साथ एक और एक्सप्लेनेशन ऐड किया और बोला सुप्रीम कोर्ट का जो डिसीजन, कोई भी डिसीजन है, अगर वो कॉन्ट्राडिक्टरी है और जहां पर भी प्लांट और मशीनरी के बेसिस पे अगर कोई कोर्ट का डिसीजन है, तो उसको हमेशा से प्लांट एंड मशीनरी पढ़ा जाए. मीनिंग देयर बाय गवर्नमेंट क्लियरली सेड दैट वी इंटेंशनली वांट टू रिवर्स द वर्डिक्ट व्हिच इज देयर इन द सफारी रिट्रीट. Now, because of this, one thing which comes very clearly is that once it is going to be notified prospectively, that is, once this finance bill will convert it into an act, it will get a presidential assent, और ये जिस दिन notify हो जाएगा, उस दिन की बाद से अंडर कंस्ट्रक्टेड बिल्डिंग्स जिसके अंदर सिर्फ सिविल स्ट्रक्चर है, वो अपने आप को प्लांट एंड मशीनरी की तरह ट्रीट नहीं कर सकते. तो जब प्लांट एंड मशीनरी ट्रीट नहीं कर पाएंगे, तो ये बेसिस के ऊपर वो इनपुट टैक्स क्रेडिट का तो बेनिफिट नहीं ले सकते. अब नाउ द क्वेश्चन रिमेन्स कि तो क्या गोइंग फॉरवर्ड ऑल दीज बिल्डिंग्स कैन दे नॉट क्लेम द इनपुट टैक्स क्रेडिट? Plus, because this change is retrospective, it has come from with effect from 1st/7/17. All those who have claimed the credit, what should they do? अगर उन्होंने क्रेडिट लिया हुआ है, should they reverse it? अगर उन्होंने यूज नहीं किया था, तो should they reverse and claim a benefit under income tax? अगर यूज कर लिया, तो should they pay the interest or not? Or is there a possibility, can somebody still say that credit which was claimed in the previous period was correct? And can somebody say कि क्या हम इस क्रेडिट को आगे भी ले सकते हैं, क्या ये पॉसिबिलिटी है? एंड दैट इज वेयर अगेन ये बैकग्राउंड देना इसलिए जरूरी था, बिकॉज सुप्रीम कोर्ट के जजमेंट को नलिफाई करने के लिए गवर्नमेंट हैज ब्रॉट अ चेंज इन दिस बजट. बट सुप्रीम कोर्ट के जजमेंट में सिर्फ एक यही एस्पेक्ट नहीं था जिसकी बेसिस पे सुप्रीम कोर्ट ने अपना जो डिसीजन दिया उसमें सिर्फ यही ऑब्जर्वेशन नहीं दिया. सुप्रीम कोर्ट हैड वन मोर ऑब्जर्वेशन. So, I think Rishabh Bhai is here. Rishabh, would you like to bring in and explain your perspective to this?
Firstly, good morning to everybody. It is a special honor to address everybody here, taking time out to attend this meeting. Coming to the point which Yash Bhai has raised, we need to first also address the point that, and there is a difference in law when you outsource your construction versus a case where you do an in-house construction. The entire amendment and Supreme Court's discussion has been only on cases where somebody has performed a construction in-house. When I say in-house, applying its own technical architect team, labor, material, etc. This decision or this amendment is not for cases where the entire work or even a part of the work has been outsourced to a works contractor on a EPC or a turnkey or a lump sum basis. So that's something which is an important takeaway from this entire span of events from October 24 to this recent amendment. Now, what Yash Bhai is actually emphasizing, and which is very relevant for us to take note of, is if we are into a case where we are occupying a building for residential purposes, there is no credit anyways. For personal purposes, there is no credit. for official own occupation purposes, like a commercial purposes, the government as a policy decision has decided not to give you the credit, rightly or wrongly, but that's a policy decision which we may have to follow. What is under debate is a case like a shopping mall or a logistics chain or a cold storage chain, a cinema hall, a hotel, a hospital, an educational institution, or these specialized civil structures which are used for manufacturing operations, etc. Okay. I am having cases where, a special factory has been built and special civil structures for, manufacturing of chips, etc. Now, why the industry has been, seeking this benefit is they are saying that this entire thing is a technical installation, a technical infrastructure for performing my main core activity. If you do not give me this credit, then the cost of operating this factory is going to multifold, and I will end up increasing my cost, leading to, a tax on tax situation indirectly. So the Supreme Court came in to benefit all the taxpayers, and they said, yes, we agree that if it is used, it is functional in nature. If the building is not occupational in nature, but functional in nature, ये बहुत बड़ा डिफरेंस, ये बहुत थिन डिफरेंस है जो यश भाई बता रहे हैं कि इफ इट इज मियरली फॉर ऑक्यूपेशन आपको क्रेडिट नहीं मिलेगा, बट अगर ये एक टेक्निकल और फंक्शनल बिल्डिंग है तो आपको इसका क्रेडिट मिलना चाहिए. अब अमेंडमेंट क्या कर रहा है? अमेंडमेंट ये बोल रहा है कि अगर आपका सिविल स्ट्रक्चर है तो आपको क्रेडिट नहीं मिलेगा. But if it is an apparatus, or if it is an equipment, or if it is something which is in the nature of a functional building, then you will get the credit. So going forward, जैसे यश भाई बता रहे हैं, the law is going to be oriented towards giving only credit for apparatus, equipment, plants, or machineries. Civil structure by itself will not get credit unless हम लोग ये प्रूव कर पाए और कि ये हमारा फंक्शनल यूटिलिटी के दे रहा है.
Right, Rishabh bhai. There is one more other thing which is relevant here. That is, जो ऋषभ भाई ने बोला उसके अलावा सुप्रीम कोर्ट ने एक पैराग्राफ में ये बोला कि इफ दैट बिल्डिंग इज नॉट फॉर द ओन यूज देन स्टिल यू आर एंटाइटल्ड टू द क्रेडिट, चाहे बिल्डिंग प्लांट एंड मशीनरी है या नहीं है. और उन्होंने ओन यूज को डिफाइन, उनको एक्सप्लेन करा अपने इंटरप्रिटेशन में कि ओन यूज का मीनिंग क्या है. और ओन यूज को उन्होंने बोला कि इफ you are constructing it for the purpose of giving it on a lease or a license or a right to use, then it can be said that you have not constructed it for the own use. Interestingly, सुप्रीम कोर्ट का ये वाला जो ऑब्जर्वेशन है पैरा 32 में, सिर्फ एक ही पैराग्राफ में ऑब्जर्वेशन है, इसके ऊपर काउंसिल ने ना डेलिब्रेट किया है और ना इस बजट के अंदर उसके रिस्पेक्ट में कोई चर्चा है और ना कोई अमेंडमेंट है. So if you look at it specifically, basically what we are trying to say that why still that debate is open. If I am having a construction of an immovable property, there are three possibilities. If I'm doing a construction, there are three possibilities. One is it is not an immovable property at all. That is movable in nature. What is the example? एग्जाम्पल रिसेंटली सुप्रीम कोर्ट ने किसी और डिसीजन में भारती एयरटेल की केस में स्पेसिफिकली इन रिस्पेक्ट ऑफ अ टेलीकम्युनिकेशन टावर, and maybe telecommunication tower may not be useful for everybody, but prefabricated engineered buildings के respect में बोला that all these PEBs also they are not immovable properties, they are movable in nature. Now हम सब जानते हैं, हम में से बहुत सारे लोग जिन्होंने पिछले 5-6 साल में फैक्ट्री कंस्ट्रक्शन किया है या वेयर हाउस कंस्ट्रक्शन किया है, वहां पे मेजोरिटी अभी पीईबी ही यूज होता है. And Supreme Court in Bharti Airtel has said that PEB on the basis of again the theory of annexation और functional test के बेस पे इसको हम ये नहीं कह सकते immovable है. तो when it is not immovable, it is out of 17(5)(d, बाकी चर्चा करने का जरूरत ही नहीं है, credit should be available. If it is immovable in nature, for example for some reason, तो सुप्रीम कोर्ट के रेट्रोस्पेक्टिव अमेंडमेंट से प्लांट एंड मशीनरी वो है, प्रोबेबली दैट आर्ग्यूमेंट इज क्लोज, वो खत्म हो गया वहां पे आर्ग्यूमेंट. आगे के पीरियड के लिए, पीछे के पीरियड के लिए भी एक बार के लिए कह सकते खत्म हो गया. बट वेदर दैट कंस्ट्रक्शन वाज फॉर माय ओन अकाउंट और नॉट, I have to still prove it from my books of account. Like for example, I've constructed a I've incorporated a company whose object clause says that I will do a warehousing activity. My object clause says that I will run a hotel. Or let's say I am constructing a building where before completion I am entering into an agreement with a customer which says एक particular time तक मेरा construction पूरा हो गया, then he will take a premise on rent. All these are going to have an impact, and all of these things are still positive, where law supports us to say that one can claim the credit. So the point is that the doors are not completely shut; they are still open, but one has to look into on case to case basis. One thing probably, Rishabh bhai, where a small deliberation would be required. Let's say for all those who have claimed the credit already, और अभी they want to take a conservative stand and say कि अभी तो credit ले लिया तो अभी क्या करे, reverse करे या नहीं करे. Now, credit which has already been claimed, can that be taken by government through a retrospective amendment? If I say that credit is my right, can government take it back? What is your view on this? I mean, how should one really look into this from that perspective?
Correct. So Yash bhai, now, like you said, there are two different avenues to avail the credit. One was based on the plant and machinery anomaly and plant or machinery anomaly. The second is whether it is for leasing or whether it is for an own use, right? If we are a shopping mall and we have claimed credit on the ground that we are onward leasing it, okay, then this retrospective amendment doesn't affect us. We retain our credit. We are good to go. The government has only is aware of this issue is matter and has implicitly accepted that you are entitled to this credit on onward leasing activities or onward licensing activities. Okay, so no problem with that. But if you are creating an immovable structure, okay, and you were saying that yes, it is part of the overall plant, even the civil structure is part of the plant, then the Supreme Court had given a relief that yes, it is a civil structure. Since it's part of the overall plant, you will entitle to the credit. In some sense, they had given this relief. Now, this limited aspect on the civil component of this entire plant was given as a benefit by the Supreme Court. The rest was anyway eligible. All other apparatus, equipments, be it your HVAC, be it your elevators, be it your cranes, be it your big furnaces, etc., and your entire
All
mechanism,
mechanical instruments.
mechanical instruments were anyway eligible. They were not subject matter of this debate at all. It was only the administrative buildings, the civil walls and civil structures which are created partially below the PEBs, etc. That was what was the issue. Foundation was anyway eligible, right? Now, on this limited issue, because what we had to do from the entire, let's say, 50 crore credit or 20 crore credit, we had to remove the civil structure and then disallow only to that extent. And that was what is the issue. On this narrow part, the government has taken a very hardline stand saying, yes, you may be part of the plant and machinery, but being a civil construction, I will not give you the credit. That was the hardline stand of the Supreme Court, the government, the 55th Council, and the recent proposed amendment in the budget finance bill. On this specific point, now, whether this retrospective amendment and freshly entitles you the credit, the answer is no. Okay, so if you had credits in 24, 25, you are not entitled to this credit because of this amendment as and when it comes up. Okay, but you've already availed the credit and you've already utilized that credit, let's say, right? There, I'm really with Yash bhai's view that something which has been done and completed, to that extent, it cannot be undone. And we will not be able to, the government as such is somewhere having a tight hand in trying to recover this. That is one aspect. But there are also people who have claimed the credit but not utilized it. That is another set of people. can the government administration say, yeah, and which was recorded in the judgment that, or which was canvassed in the judgment that it is a purely typographical error and therefore it is curative in nature. And by law, if something is curative in nature, it is curing a very apparent mistake, then it has retrospective effect. Now, Supreme Court said it, no, this is not an apparent mistake. It's a conscious decision. Okay. Therefore, if you ask me if revenue even says it's curative in nature or if it is curing a apparent defect, according to me, the Supreme Court has already given its view on this point that it is not a apparent mistake, it was a conscious amendment. But the government has been ultra cautious in this. I hope the government is very ultra cautious. They have inserted an explanation. By that explanation, they say that this amendment will overturn any other prior decision of the Supreme Court. Also, mind you, that the government has filed a review petition before the bench.
The review petition
in
is
respect
pending
of
in the
the
Supreme Court.
matter. So I think the government is going all out to ensure this is not eligible for credit from 1/7, right? So I think as a more pragmatic stand, if I have to really give you an answer, Yashbhai, is on the civil component, which is not plant and machinery. Okay, the business should take a conservative call or a rational call and give up this credit, take the benefit of depreciation and the income tax, and go ahead. That would be my simple, take on this final matter.
Correct. So, so basically that's the view around the retrospective amendment. At least for the times to come, we have a clarity on the plant and machinery aspect. But again, from the perspective of own use account and whether it is movable or not, or whether it is only structure, all those arguments, all those points are still open, and one has to take the view. Now we move to next amendment and change, which is again very relevant, very useful, and again it has an impact for all those who are dealing with the compliance on a day-to-day level, that is credit notes. हमें मालूम है जीएसटी में हम 4 रीजन से क्रेडिट नोट इशू कर सकते हैं where I am reducing my output tax liability. That is when the rate of tax is on the higher side, when the taxable value is on the higher side, when there is any deficiency in the service supplied by me, or when the goods which I have supplied, they are returned back to me. In all these 4 cases, within the time limit which is given in the law, that is within the 7 months from the end of the financial year, I can actually issue a credit note and I can reduce my output tax liability. Up till now, law जो है section 34 में ये provision नहीं था कि if I am reducing my output tax liability, then my recipient has to reverse the input tax credit. That provision was only contained in section 15 when I was issuing a post-supply discount credit notes. So if my credit note was not pertaining to discount which is being issued, but it was pertaining to other reasons where my goods are returned, service is deficient, or I had mistake in preparing the invoice, then in all those cases I could issue a credit note. Only thing which I had to prove that I've actually made the payment of that credit, of that amount which I had received earlier, back to my recipient. So if let's say I've raised invoice of 100 rupees plus 10 rupees of tax, and then I'm issuing a credit note of 20 rupees with 2 rupees of tax, then I have to only prove कि मैंने वो 22 rupees वापस कर दिए उसको recipient को. If I could prove that, I was entitled to the benefit of 2 rupees. But at the ground level, the situation was not this. At the ground level, specifically in audits, it was always asked that prove to us that recipient has reversed the input tax credit or not. And then there was a problem. And all of us were saying, where is the provision in the law? So now government has bought that provision. It is a prospective change. It is not a retrospective change, where they say any sort of a credit note which is issued in GST, जिसमें as a supplier you are reducing your output tax liability, you have to take a confirmation from the recipient that they have reversed the input tax credit. And if you are able to do that, then only you can claim benefit of reduction in output tax. Otherwise, you cannot do that. Now, it has 2 implications. One is for the previous periods, wherever department is asking for the activity of reversal being done by the recipient, one can take an argument by saying that it has been inserted in the Act through Finance Act 2025 only. पीछे के period में it is not required except for in case of a post-supply discount. Second, how are you going to take this confirmation is something that remains a question, because how am I going to communicate to my recipient, because there is no facility as of now available on the GST portal. We are aware कि अभी IMS इनवॉइस मैनेजमेंट सिस्टम एप्लीकेबल नहीं है. जिस दिन एप्लीकेबल हो जाएगा, जिस दिन फुल फोर्स में आ जाएगा, probably all of these requirements of matching, mismatching, that will be done through GST portal. But because as of now it is not there, the only possible way is to take a written declaration from the recipient that he has reversed the input tax credit and in which month, and then keep it in your records and give it to the department as and when it is asked for. We are already doing this because there is a circular which was issued in respect of a post-supply discount compliance ki wahan par, because I have to prove that recipient has reversed the input tax credit. So there we are doing that activity. That activity now need to be stretched to every sort of a credit note which I am issuing under GST. So this is going to have a compliance effect. This as a matter of good governance, good compliance. Even if this provision is not, let's say, implemented, and if I am dealing with my customers with whom I can actually communicate, I should actually go back, tell them to give me a declaration. The better practice should be that whenever I am issuing a credit note to my recipient, at the same time only I take a declaration from them and I take a countersigned copy of it and keep it with me. As of now, the modality of this was obviously would be explained by way of notifications or the rules. But this is going to be one compliance activity which would involve some sort of a communication with the recipient. Good part is because it is prospective, it does not have an impact for the previous period.
Yes, but
Yes,
just a
Rishabh.
couple of things. I thought I have a point, and you may kindly chip in,
Yes.
correct me if I'm wrong. One is that a very critical issue which was there with the trade, especially longer supply chains. If let's say the medical pharma industry or the FMCG industry, if A supplied it to B, B supplied it to C, C supplied it to D, it was very difficult for A, after even issuing the credit note, and
Correct.
B, after even reversing the input tax credit, to
Correct.
prove that the incidence of tax has not been passed on to any other person.
Right.
Because that product is, if the product was with B, the incidence of tax is with B. But it in many likely cases, the stock would have changed hands multiple times and reached even possibly the end consumer, right? So then the question came up as how at B, I am required to prove that the incidence of tax has not been passed on to any other person, which was a Herculean task. Now, I would also read this proviso as a beneficial proviso to an extent. It is assumed that if it is a B2B transaction, I don't need to prove that the incidence of tax has been passed on below B once B has reversed the input tax credit.
Correct. Correct.
I'll repeat that for the benefit of everybody. The way this amendment is, if in a B2B transaction, my immediate customer has reversed the input tax credit, my obligation to prove if at all that has been passed on below B is not there anymore, which is a welcome move if you ask me.
Right.
Right? It has to then be checked at B's level. If he has onward issued a credit note, and then whether B has passed on it to C at each level. So the government or the administration is now have to look at every B2B supply chain down the value chain to check if the input tax credit has been passed on. But in a B2C scenario, it's very clear. So
That
in let's say real estate,
the last extent.
yeah, in a B2C, let's say a real estate 5% sector, I have to prove that I've given him the benefit of 5%. Okay, and then automatically I'm entitled to the reversal in the credit note. So to this extent, I believe that it is also a welcome change for the trade.
Point well taken. Absolutely, Rishabh. Okay, now we go to IMS. I think IMS, all of us are actually all those again who file return on a regular basis, and all those who are well versed with GST portal, they are aware that now on the GST portal you see a facility. You call it a facility or a compliance or a responsibility. It is open for discussion, but it is like this that now going forward, whatever input tax credit we are taking in our GST returns, that matching needs to be done on an invoice level basis, which we were any which way doing after August 2023, the manner in which the return filing for format of GSTR 3B was changed. But now that has to be done on a real-time basis on the GST portal, where each invoice which is appearing on my GST portal in my GSTR 2B, I have to accept it, reject it, keep it pending, or I need not take any action on it. Up till now, we could see all of this on portal. We were looking for a legal mandate to this. Government in the last council meeting said that we will put a legal mandate to this. They have done through by amending the relevant provisions under Section 38. So we need not really go into what has been changed in Section 38, but the changes in Section 38 specifically now gives a legal mandate to this IMS compliance that needs to be done on GST portal on a monthly basis before filing your GSTR 3B, and you have to ensure that you do this matching on GST portal. Now, if you look at it practically today, majority of us don't actually do this IMS matching because it is optional, and all of us are waiting that once the clarity would come both in the law side of it and also the implementation of this on the portal, because there are certain challenges on the portal specifically with respect to non-availability of the utility on the portal for doing this accept, reject and pending, or in respect of the matching of credit note. Specifically, what if I reject a credit note or accept a credit note? What is the implication on the supplier? So all those unanswered questions are there. But for this, all of us have to be ready. All of us need to have our preparedness. And one of the way for the preparedness is specifically for all of you who are available and listening to this, and considering that we know when we deal with you on a day-to-day basis that our organizations do have a separate procurement team, and our organizations do have a separate tax compliance team or a taxation team or an accounting team. In my understanding, this accept, reject, pending, that responsibility has to be taken by the procurement team. If the procurement team is not taking this responsibility and it comes to the taxation guy, then there can be a possibility that the kind of interactions would have delayed results, or it is bound to cause miscommunication for a simple reason. This IMS is not telling me about my input tax credit eligibility. My IMS is only telling me whether this transaction belongs to me or it does not belong to me, or if it belongs to me, in which month I am going to acknowledge that for the purpose of my books of account or for my GST returns. So that is the only purpose of IMS. Once I acknowledge that this is my transaction, then I will decide subsequently whether I am eligible for the credit or I am not eligible for the credit. So these two aspects are now differentiated. Up till now we were not differentiating this. अभी तक हम जो क्रेडिट हमारा हम ले सकते थे उसको हम जीएसटी रिटर्न में डाल रहे थे, फिर हम थोड़ा इंप्रूव करें। पिछले 2 सालों में हम कह रहे थे जितने भी ट्रांजेक्शन हैं, चाहे वो मेरे है या नहीं है, आई एम पुटिंग दैट इन माय जीएसटी रिटर्न। इसमें से जो क्रेडिट मेरा बनता है आई विल कीप इट, रेस्ट आई एम गोइंग टू रिवर्स। नाउ IMS इज टेलिंग मी out of all the transactions which are appearing, you first decide whether this belongs to you or not, refine this. Now from that list you decide whether you are eligible for the credit or not eligible for the credit, and do this on the GST portal. So this will obviously take some time, but now that legal mandate is going to be there for this, we have to be absolutely ready for doing this compliance. Okay.
Right, just a couple of things.
Yes.
One, I think this credit note which has been amended will have been operationalized through the IMS, I think, which is very much likely. Is that also this case?
Up till now?
No, going forward.
Going forward, yes. That matching of credit note, I was saying, once the IMS will be operationalized, then in that case, that physical requirement of taking the confirmations may not be
Correct.
required. So government may actually coincide both these timelines. The day on which they implement IMS, they will implement the change in Section 34.
Correct, correct, correct.
Correct.
And the second aspect is for the trade to also appreciate that we were being in the past 1.5, 2 years, if I'm not wrong, we were on the concept of temporary differences in cases where we were not receiving goods, claiming it and then reversing it temporarily and reclaiming it back. But now with the IMS, do we need to slightly tweak our reporting in 3B
Correct.
to the extent of those cases where I am not, the invoice is reflecting, but I'm keeping it as pending
Yes.
for future claim.
Correct. So that it will never form, it will only form part
Correct.
of my 3B. Once I accept that it is my transaction,
Correct.
then I
Correct.
will only decide whether I'm eligible or not eligible for the credit.
Correct, 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 correct. So temporary reversals going forward will be more in the nature of a case where you've not paid your vendor over 180 days,
Yes, yes.
etc.
Correct, correct. Absolutely. right.
Deferment of credit on account of not receipt of goods or on account of accounting a transaction much later
Right.
will now be part of the IMS module.
Correct. Absolutely right. Okay. Now we quickly move to last 2-3 changes, and then we'll go to DT. So this is again an important change. Specifically, now we know that appeals have first appeal. Now the matters are going up to appeals, and soon we are going to have GST tribunal. Hopefully, in next 2 to 3 months, GST tribunals will be operational, and the benches would start sitting, and we would be filing the appeals there. Up till now, we know that when an order is passed against us, and if we have to file an appeal before the first appellate authority, if it involves a tax amount, then we have to pay 10% of the disputed tax. If the order does not have any tax amount at all, if the order is only for penalty, or if the order is only for confirming demand on interest and penalty, then there is no provision for paying any pre-deposit for filing the appeal. Now, the proposed change says that if I have to file an appeal in respect of those matters where the tax is not there, but only penalty is there, then in those cases, I have to pay 10% of the disputed penalty amount to file an appeal, and that is going to be the prerequisite. And if I am going into second appeal, and again in that second appeal, there is no tax involved, then I have to pay 20% of the remaining 10%, or in totality 20% of the penalty amount. So that is going to be the going forward whenever these provisions will be implemented. These penalty provision, this pre-deposit of penalty is going to be mandated. It is going to specifically have a huge impact in all those
Correct.
cases who are genuine suppliers but facing the litigation where the department has alleged that you have made a bogus supply. There, in those cases, they would now be completely required to pay 10% of the penalty amount. On the other side of it, for all those who are fighting the matters, or who are at the advantageous position, who have actually indulged in these activities, and they were fighting the matter because they had an incentive of not paying any pre-deposit, for them now at least this is going to be a level playing field. So for some it is going to be disadvantageous. For at the other end of it, in some cases, government has actually removed this disparity which was there. These pre-deposit provisions were already there in an excise and service tax regime where only penalty matters were there. So this is not something which is new. The only new part in GST is because if these penalty matters, what happens is if there is A to B, B to C, B to C to D, and all these cases, then from A up till the last, before that, all of them have to pay the penalty. The demand is only of penalty. So now all of them have to pay 10% of the penalty amount if they have to actually file the appeal before the first appellate or the second appellate authority.
Yash bhai,
Yes, Rishabh bhai.
here I would like to give a more critical comment. See,
Yes.
when the government asks for a pre-deposit of a tax, it is to protect its revenue, right? So, and they don't want the length of the litigation which is there currently in our country to deprive them of the tax revenues and to keep the taxpayer interested in the litigation and even the revenue. But to have a pre-deposit on a penal provision, okay, is something which is a little bit, I would believe, a retrograde step, because the tax is all collected already in this transaction, or the government admits that there is no tax payable in that sense, or the tax is already with it. having collected the taxes on the particular transaction at a particular point of chain, then having a pre-deposit of 20%, 10 plus 10, because today you don't get a penalty relief at the first appeal in some sense, is something which really needs to be relooked.
Right. So there are arguments at the both sides, but yes, from a industry perspective, this is something which is definitely going to have a negative impact. Okay. Next is one new mechanism which has been proposed to be introduced is track and trace mechanism. The background of this is that government through GST Council did an activity where they were able to identify specific goods in specific industries which are prone to clandestine removal. That means they are prone to those activities where the tax evasion is there in respect of those goods. So in order to curb that, in addition to the other measures which have been implemented over the period of time, this track and trace mechanism is now proposed under Section 148A, where government is going to notify the goods or people who are in possession of those goods, and they need to have a unique identification mark on those specific goods or the packages of those goods. The modalities will come over in the period of time. अगर इसका बैकग्राउंड देखेंगे तो EU वैट के अंदर टबैको प्रोडक्ट्स के ऊपर दिस ट्रैक एंड ट्रेस मैकेनिज्म इज ऑलरेडी इन प्लेस where in order to ensure that there is no illicit trade, there is no illegal trade of tobacco products, or there is no clandestine sale of those tobacco products, that concept is there where the supplier has to actually bear the cost to actually put this unique identification mark. So government notifies the goods, then government gives a mechanism and government tells it कि आपको ये mechanism follow करने के लिए जो भी cost लगेगी, that cost you have to pay, you have to bear that cost, and they put it in the section. Same mechanism is there. As of now, no goods are specifically notified. That will come through a separate notification. But all those who will be notified under this, they will have to specifically comply to this. In case they don't do this, there are penalty provisions which may be up to 10% of the tax amount involved in those goods. It is a hefty penalty. All the cost that of the compliance has to be borne by the person who is actually dealing in those goods. So that's one new change or one new compliance that has been brought in 148A. Okay. Schedule 3, one small change which is there. It was again kind of an anomaly which has been removed. An SEZ supplying goods making a supply to another SEZ, or an SEZ making another supply to a free trade zone, or a free trade zone making a supply to another free trade zone or an SEZ, they are treated neither as supply of goods nor as supply of service, and it is a retrospective change. So now SEZ to SEZ supplies, there was a confusion whether it will be covered in a Schedule 3 or not, the manner in which the other entries of Schedule 3 were there. But by way of this specific inclusion, insertion of the entry, they have specifically explained that all these transactions are neither supply of goods nor supply of service. That does not mean that they become exempted or non-GST. They are Schedule 3 transactions. इसके ऊपर इनपुट टैक्स क्रेडिट भी रिवर्स करने की कोई जरूरत नहीं है. So that's one of the changes which is there in Schedule 3. Okay. I go to one important change in customs, and for final comments, then I'll go back to Rishabh Bhai. In customs, there are two changes, and these two changes are quite useful and relevant changes. One is there is change in provisional assessment. There is a specific inclusion of time limit which was missing in provisional assessment in Section 18. So what happens is, if let's say I'm importing any goods and in respect of valuation or classification, there is a dispute. And in that case, I had an option to opt for provisional assessment. The problem was in the section, there was no mandatory time limit as to up till what time this provisional assessment can be concluded. And it kind of actually made this provisional assessment a never-ending exercise. Now a time limit of 2 years has been basically inserted in this, and at the discretion of the Chief Commissioner, an additional time limit of 1 year extension of 1 year can be sought. And within this time, the proper officer has to actually conclude that provisional assessment and issue a final assessment order. And then on the basis of it, an action can be taken. So it is quite useful, quite helpful for all those who importing, let's say, capital goods or importing those goods where there are dispute in terms of valuation or classification, it will at least bring the certainty, and it will also encourage all those people who are not sure as to what needs to be paid to actually take this route of provisional assessment. Second is the much awaited concept of revision of bill of entry, and this is a new section 18A. So up till now under customs, it is in fact not only bill of entry, it is a revision of an entry in case of a bill of entry, bill of export, or a shipping bill. So up till now under customs, if I have already filed a bill of entry for home consumption, and let's say I have the goods are cleared, or let's say I have filed a shipping bill, and subsequently I realize that there is some error in it, then it was at the discretion of the officer under section 149 कि वो उसको rectify करें कि rectify ना करें. And in majority of the cases that rectification was not taken up by the officer at all, वो उसको change भी नहीं करते थे, for a simple reason that they said that under 149 the important condition is that you should be able to prove that evidence was there that it was an error and it is not an afterthought or you are not changing your self assessment. अब अगर इसका एक बिल्कुल प्रैक्टिकल एग्जांपल ले तो जीएसटी के अंदर वी ऑल ऑफ अस नो दैट देयर वाज दिस सेक्शन 9610 वेयर पीपल वर इंपोर्टिंग गुड्स अंडर एडवांस ऑथराइजेशन. दे वर नॉट अलाउड टू एक्सपोर्ट गुड्स ऑन पेमेंट ऑफ आईजीएसटी. देन DGGST issued notices pan India. There was a problem. हालांकि now that refund provision has been omitted in October 24. But a lot of people thought ki let us give away the exemption on bill of entry. So let's go back, pay the tax and file the reassessment of bill of entry. But that reassessment was not taken up. Now with this 18A, I have an option where I can actually go pay request for the revision of my bill of entry. And then within a specified time, officer may allow me to do it. I can pay additional tax and get a revision of my bill of entry. And I can get that credit in my bill of entry, and through that it can flow to my GST and I can claim the credit of it. If I paid any excess duty, rather than filing an appeal, now I can actually go and file for a revision of this bill of entry. I can explain that it is an additional tax which I paid, and then I can file a refund within the time limit of 1 year from the original payment of tax. Similarly, in case of exports, if I have, let's say, put details in my shipping bill and there is an error, and because of which I am facing any difficulty, and no benefit under that shipping bill has been processed, that means duty drawback not given, ROTAP not given, IGST refund not given, then again I can take benefit of 18A, get a correction in my shipping bill, and let's say if the IGST amount is incorrect, IGST value is incorrect, port code is incorrect, or other details are incorrect, my GST number is incorrect, I can get it rectified and then I can claim a benefit of it. It is not only restricted to IGST related changes, it is related to other duty related changes also. But it is quite a welcome change. It is quite useful because it was always a problem under custom to actually get the document verified. Settlement Commission is now no longer would not be taking any cases from 1st April 25, may not be useful for most of us. In fact, Settlement Commission came I think 2 years back only, and now it has been taken away in the customs. So but 18A is very important change in customs who are dealing in export and import of goods, and it is going to have, it is a beneficial change which has been brought by the government. So these were the changes in indirect tax side of the budget, both in terms of GST and customs. Before we go to direct tax side, Rishabh bhai, I can see some questions, so I would take that questions and for your final comments also. So
Sure.
there is one question which is asked Rishabh bhai, and we'll be crisp in answering so that now we go to DT. One question is from Rahul Goelji. Can the cross-charge mechanism continue to work or not, or needs to shift to ISD?
Yeah, I think the straight and simple answer to this, by virtue of the circular, is if they are externally procured services at the HO or at the office, but attributable or pertaining to another office, then it has to be done through an ISD. Okay. But if these are services which are consumed in a particular HO, okay, let's say an auditor services, okay, or brand marketing services, etc., which are consumed at the HO at a decision-making level, and then they form part of the cross-charge mechanism.
Correct.
So the answer is parallelly both will work.
So both will work. You have to decide what actually has to move through ISD, whereas
Yes.
cross-charge is not a benefit. It's a compliance that I have to do rather than looking at a
Yes.
benefit. Okay. Srinivas Rao ji has asked a question, sir. Any chance of leaving penalty under 122? I couldn't. ITC
Context
availed
is-
but not utilized and utilized subsequently. Is there any chance of leaving penalty under 122 with respect to that retrospective amendment in 17.5D?
I think that's a settled law, Yashbhai, that if there is a retrospective amendment, penal provisions have to be read as on the day the offense is committed. This is not an offense under law.
In fact, there is a judgment of Star India also, which says
Correct.
in case of a retrospective amendment, you need not pay interest also, because
Yes,
that
yes.
interest is in the nature of penal. So,
Correct.
forget penalty, one can take a stand that I will not be required to pay interest also. We have utilized the credit.
Yes, yes. If it is utilized, then you can argue that case out.
Argue that point. Then there is question from Aryan. Detailed ledger balance confirmation along with declaration can prove the recipient has reversed the ITC, though he could take the ITC again by cancelling the ITC reversal entry. He's just talking about the modality of 34, which is right. But then one
I think
question
once
is
it's implemented through the IMS, then even this may not be an issue.
correct. So if it is implemented without IMS, then that's the problem.
Yes, see that. I think then the declaration by the customer becomes incorrect, if at all. Then department will have to first rectify the error at the customer's end and then only come to us, if at all, for a recovery.
Correct. Then there is a question, what is the impact on ITC on construction of factory building on own account?
I think we
And
discussed it.
question, what is the provision of section 34 in case of a customer who does not take ITC credit? Which document we have to take from them as they are not taking ITC will not reverse? So two separate questions. Can on own account, I can say that factory building is on own account? Number one, what is your view, Rishabh bhai?
Yes, so factory building which is for own occupation and not for onward lease, I think then that is own account.
So credit
And
is
now
not
with this
allowed.
retrospective amendment, that civil component, civil structure component may come under the scrutiny.
So yeah,
Rest is all eligible.
Factory building definitely that it should be on own account. So the credit of civil structure should not be allowed.
Yeah, but if it is PFBs, then I'll go by what you have been saying. That
Right.
PFBs is not a civil structure. They are movable properties and they should be anyway eligible.
Right. In respect of 34, they're saying if let's say any registered GST customer has not claimed the credit at all,
Yes.
then how would one do compliance of 34?
So let's say these are restaurant customers. You're supplying to restaurants, or you're supplying to a real estate company, to a hospital, to an educational institution, who are though B2B but not entitled to the credit. Okay. So if you ask me, a simple declaration is enough from them. You can, avail a simple declaration for the entire year. You need not avail a invoice level declaration, because it's understood they are under a particular notification and are not entitled to the credit. I think that is very thing, but it has to be, you still have to obtain the declaration. It will not be possible to assume from the supplier's end that he's not eligible for the credit. Because what happens in certain tax sectors, they've been given an option to avail or not avail, be it a tour operator or a GTA. So, the department is not going to just accept the broad service line of the customer. He may be having multiple service lines. So it is always in our interest to get the physical declaration, even if he is not entitled to the credit.
On the ground level, the answer would actually be that recipient would have also shown the credit in table 4A5 and then shown it in table 4B2 or 4B1.
Correct.
Or reversal. So again, there they would be able to prove through the return that in which return they have actually taken and reversed the credit.
Correct.
That procedure they should follow.
Correct.
One is, Bhushan Bhai is asking when IMS will be mandated to follow, when this provision has to be notified, then state governments has to also pass their state acts. Then once it is notified, then the GST portal should be ready and then it will be implemented.
It's possible the GST portal will be operationalized before the legal amendment.
One question from Anshul, pre-deposit condition for appeal in GST where the entire demand is for interest is still zero.
Yes,
Not required. what is the base of difference to differentiate of any credit to choose ISD or cross charge?
I think we have discussed
I
it.
think Rishabh has already answered that. External invoices through cross charge, if not used for own use. And apart from that, all other things as an activity internally generated, done for the other branches, that has to be through
I
cross.
generally use, although it's very simple but difficult to implement, a bypass route, a bypass highway is an ISD.
Hmm.
A highway which crosses through the city is a cross charge invoice.
Yeah. Okay. So I think we are done with the ISD, indirect tax provision. Thank you, Rishabh Bhai, for your insights on all the topics. We hope that it was useful for the participants. We now straightforward go to the direct side. Direct tax side, we'll hand over to Shefali.
Thank you, Yash sir. Thank you, Rishabh sir. It was a great session. Without wasting further time, I would directly hand over the mic to Mudit sir, who will be delivering on the amendments in direct taxes. Mudit sir.
Good afternoon, everyone. I would like to thank everyone for coming here on this Monday morning, in spite of everyone's busy schedule. So without wasting any time, I will take you through the amendments which have been proposed in this union budget related to direct taxes. First major announcement made by the finance minister was that a new income tax law will be introduced within next week. According to her, during her budget speech, she said that the new law is going to be simple. It is going to be half of the existing law. Litigations would be reduced. And one more thing, they said complexity would be reduced. So the law which was introduced in 1961, government is still saying that in 2025, the complexity would now be reduced in the new law. So what we are expecting from this new law is, it might be a simple law, content-wise. It might be a simple law. It might involve artificial intelligence. It might involve some new exemptions and deductions, and it might be aligned with like crypto and digital transactions. It might be aligned with all those things and international practices. And maybe in later half of this month, we will be able to schedule one more webinar for you all, and we will be discussing amendments proposed in that law at length in that webinar. Next, and the only exciting amendment which has been made in this budget related to direct tax was the slab has been increased to 12 lakh. So when we say this slab has been increased to 12 lakh, for the people whose total income is up to 12 lakh, they will not be required to pay any tax from now on. But for people who are earning anything above 12 lakhs, will have to pay tax from 4 lakh onwards. So if you can see this table, there is no change in old regime. If I specifically talk about that, in case of new regime, tax would start from 4 lakhs and from 4 lakh till 8 lakh, it is going to be 5% from, just a second. From 8 lakh to 12 lakh, it is going to be 10, 12 to 16, it is going to be 15, 16 to 22, 20, 20 to 24, 25, and above 24, it is going to be 30%. It is going to be under new regime only, and some exemption. In fact, most of the exemptions and deductions won't be available under the new regime. So you will have to bear it in your mind that if your income exceeds 12 lakh, you will have to pay tax from 4 lakh onwards. If it is within 12 lakhs, you will get an exemption under section 87A. where you won't be required to pay any tax effectively. Next, rationalization has been done for most of the TDS related sections, where in most of the cases threshold for deducting tax has been increased, and in some of the cases they have reduced the rate of tax as well. So I will talk about some critical amendments in this. One critical amendment which TDS which we usually see is TDS on dividend. Earlier, a company which used to pay dividend of more than 5,000 to a shareholder, they were deducting TDS under Section 194. Now this limit is going to be 10,000. Next amendment related to TDS is income in respect of lottery and winnings from horse races. Earlier it was 10,000 for a financial year. Now it is 10,000 for a single transaction. Now you won't have to see this for a whole year. If this transaction amount is within 10,000, then you won't be required to deduct any TDS. But if it is exceeding 10,000, then you will have to deduct TDS. For insurance commission, it is now 20,000. For rent, it is now 50,000 per month. Earlier, it was 2,40,000 per year. Now it has been increased to 50,000 per month. That is 6 lakh a year. But now you will have to see this limit on monthly basis instead of this annual limit. So, for example, now if your monthly rent is in excess of 50,000, you will have to deduct TDS. It has been aligned to the limit of TDS which was required to be deducted by individuals. In case of professionals and technical services related TDS under Section 194J, now the limit is 50,000. Another important amendment under the TDS and TCS is related to 206C1, where TCS is required to be collected under for sale of forest produce related items like timbers and everything. Where earlier the TCS rate was 2.5%, now this has been reduced to 2%. In case of TDS on commission on brokerage, the earlier limit was 15,000, now it has been increased to 20,000. Another important amendment related to TDS and TCS is omission of Section 206C1H. So when I say 206C1H, it earlier when a seller used to sell some goods to the buyer, seller used to collect a TCS of 0.1%, and on that same transaction, at some places, the buyer was also required to deduct TDS under Section 194Q. Though 194Q had an overriding impact over the Section 206C1H, and it was specifically mentioned under Section 194Q as well that it has an overriding impact over this section. But out of a conservative approach, some entities were collecting TCS on those transactions as well, where buyer was already deducting their TDS under Section 194Q. So to remove all these hassles, this section has been removed from 1st April 2025 onwards. So for your receipts which you will get from 1st April 2025 onwards, you won't be required to collect any TCS under this section. Next important amendment is with respect to capital gains, where they have clarified that for ULIPs where exemption under Section 1010D was not available, all those ULIPs will be treated as a capital assets, and accordingly you will be required to pay tax under capital gains. All these ULIPs will be considered as an equity oriented fund, and accordingly tax rate will be decided. Next important amendment is with respect to crypto assets, where all the crypto exchanges will now be required to submit annual information return under Section 285BAA, meaning thereby you all would have seen your AIS and TIS statements which incorporates all your shares related purchase and sale transactions. You would be cross-verifying all these transactions with your books. So now all your crypto related transaction would also be available on that portal, and you will be able to cross verify it with your records. Earlier we noticed that some of the people were not able to out of oversight this income in their return, but now since it will be available in their AIS or TIS, it will be easy to track for everyone, be it assessee, their consultant, or the income tax department. So in nutshell, income tax department will keep a close eye on the crypto related assets, and it is going to be deeply regulated by them. Next amendment is related to virtual digital assets. It's a critical amendment, I would say. Earlier, the problem was under section 158B, the definition of undisclosed income was not considering virtual digital asset. Now this has been included under the definition of undisclosed income. Now one can claim that since virtual digital asset is not listed in the definition of undisclosed income, therefore the consequences of undisclosed income and the related penalties and higher rate of taxes would not apply on this particular asset. So from now on, this has been made clear that on virtual digital assets, consequences related to undisclosed income will apply. Next amendment is related to trust, where I would say it's a relaxation for the trust, where the definition of specified person has been amended. Earlier, the meaning of specified person was any person who has contributed more than 50,000 to the trust, not within the year, but till that year. So, for example, if someone has contributed 50,000 to a trust in maybe cumulatively in last 5 years or maybe 10 years or maybe since incorporation of the trust, so that person was considered as a specified person. Apart from that person who has contributed to the trust, relatives of that person and the entities in which that particular person had interest was also considered as a specified person. So then now limit has been relaxed. Now the limit would be 1 lakh in a year and 10 lakhs in aggregate, and the relative and specified or the substantial interest related entities have been removed from the definition of specified person. So now only the person who is making contribution in that trust would be considered as a specified person if he is making contribution of more than 1 lakh in a year and 10 lakhs in aggregate. So it's a welcome provision for trust. Now they won't have to, while filing their returns, they won't have to mention so much details related to a specified person, and they won't have to maintain so much documents with related to specified person. Plus, they won't have to, and maintain records with respect to their application of income if it is it has been effectively used for the specified persons. From now on, trusts were required to take registration under section 12AB for claiming exemptions. So every trust is required to renew this registration after 5 years. Now, this limit of 5 years has been increased to 10 years for small trusts. Small trusts are those trusts who don't earn more than 5 crores during each of the 2 preceding financial years. So it will reduce compliance burden to some of these smaller trusts where, to maintain all these compliances and to track everything is difficult for them. And it takes a lot of effort and time to apply for this registration under income tax. So just to give you a statistics, last month, somewhere around 700 applications were made to CIT exemptions in Jaipur, out of which 650 were rejected. So, so it takes a lot of time and effort for a trust to get themselves registered under this section. So it's a welcome provision for them. Next is again related to the trust, where they have made it clear that if in case there is the information contained in the application for registration under section 12AB is not complete, then it won't be treated as a specified violation, and registration won't be cancelled merely because the information was not complete, and assessee would be given an option to complete all these information, and it will be a much more breather amendment for the trust, since many of the registrations are being cancelled because some or the other information is not mentioned in the registration form. Next amendment is with respect to non-residents. So this is a new scheme for non-residents who are into operations of electronics and electronics manufacturing or producing electric goods. So for them, the presumptive taxation rate is 25%. So it is in a kind introduced to promote Make in India, where some people who are expertise in basically the chip manufacturing and related industries. So government has given them an option to pay tax under presumptive taxation scheme, and it is going to be 25%. Next amendment is with respect to tonnage tax. As we all know, tonnage tax scheme is there under the income tax. It is again a presumptive rate of taxation. Now, inland vessels would also be eligible to apply under this scheme, and this presumptive taxation scheme would be applicable to them. Earlier, it was not applicable to them, but now government wants to promote inland vessels as well to minimize the cost of freight and everything in inland vessels as well. Next amendment is with respect to startups. The limit which was expiring on 1st April 2025 has been extended to 1st April 2030. So it's a breather for startups as well. Government wants to promote startups, and they are trying to create an ecosystem where India will be seeing many maybe unicorns or decacorns. They are trying to target all them, and maybe in years to come we will be seeing the real impact of this. So basically under this section, 100% of exemption is available for 3 consecutive years out of any 10 years of incorporation. The only condition I would say is the turnover of that startup should be within 100 crores, and that startup should be DPIIT registered and should have interministerial board approval with them. If these conditions are satisfied, that startup would be getting 100% of the exemption from their income tax liability. Next, I would say it's a very good amendment with respect to updated return. In many cases, we used to notice earlier that out of some oversight or maybe incomplete records, or maybe no correlation with maybe with the movable properties related transaction, or maybe related to fixed deposits, or maybe any other investments as well. And especially in cases of senior citizens, some income was getting skipped out of oversight or some other reasons. So now you would be able to file in updated return even after the relevant end of the relevant assessment year for 4 years. So earlier this limit was till 2 years. Now this has been extended for 4 years. So up to 12 months, you will be required to pay 25%, then 50%, then 60%, and for third to fourth year, it is going to be 70%. So it's a welcome amendment, and we always suggest everyone, if you notice that any of your income has skipped for while filing your income tax return, then you should definitely use this tool. And though tax is slight higher in this, but you will be saving your penalty and interest portion. Next amendment is with respect to self-occupied property. So it's again a very good amendment where they have said that if you have two properties, now you won't be required to, prove that one of your house was vacant because you are employing somewhere else or you are doing your business somewhere else. If you have two houses, now you can declare your two houses as a self-occupied property, and beyond that, you will have to pay deemed rent on the number of houses you have beyond two. Next amendment is with respect to amalgamation. So what happened earlier is companies used to, merge loss-making entities with them, and they used to harvest their losses and get their income tax liabilities reduced. So, for example, a loss can be carried forward for 8 years. Now, if I get merged with an entity which is having accumulated losses in its 8th year, so I was able to carry forward it for further 8 years. So in nutshell, I was carrying forward a loss for 15 years if I am merging that entity in me in 7th year. So it was against the spirit of the law, and now they have clarified that from the date it was first computed, uh, from that date it is going to be 8 years, irrespective of the fact that the entity was merged with another entity. So it is going to be 8 years only. They have they have this loophole has been removed now, and this evergreening effect won't be available to the assessees. TP provisions has been rationalized. It's a very good amendment in that sense, where in some cases or assessees, we have seen that in every year the assessment is being done for transfer pricing. From now on, so for example, in year one, your transfer pricing assessment has been done. And while your transfer pricing assessment is being done by the department, you can apply that these same working papers should be used for next 2 years. So you won't be required to, enter into all that assessment related stuff, submission of all these documents related to transfer pricing to the department for next 2 years. So yeah, your professional fees, your time, your energy, your documentation and compliance part for next 2 years will be saved now. Next amendment is with respect to MSME, where they have increased the limit of being recognized as micro, small, and medium enterprises by 2.5 times and 2 times for investment and turnover respectively. So though it is not related to income tax, but somehow it is going to impact income tax liabilities as well, since according to section 43BH under income tax, disallowance will attract in case you don't pay your vendors on time. So the time limit is somewhere between 15 to 45 days as per the agreement. Though it can't go beyond 45 days, but it can be between any day between 15 to 45 days. So, for example, if you were dealing with an entity who had a turnover of somewhere around 300 crores, earlier that vendor was not being considered for the disallowance under section 43BH, but now you will have to consider all those parties who are micro and small, and within this threshold, within the new threshold, I would rather say, and disallowance liability may change from next year onwards. Though the date of amendment has not been notified, rather it was there in the budget speech only, but the relevant amendment is yet to be made in the MSME law. So there are various other administrative amendments as well, where they have increased or decreased the time limits of making some assessment related timelines. I guess I can skip this as of now. Just a second. So one more amendment which I would like to discuss is with respect to Vatsalya scheme, where it is like a pension scheme for the minors, where their guardians or parents are making the contribution. Now that contribution will also be eligible for deduction under Section 80 CCD 1B. So that is one amendment which has been made, but I guess that won't be that much relevant, since it is going to be eligible under old scheme only. People filing returns under new regime won't be able to take this exemption. So I hope I have covered the critical amendments related to DirectX. Let me see if there are any questions. Whether a STCG and LTCG income benefit available while So basically, ideally, it should have been available, but and it was pronounced by some high courts as well that it should be available. But interestingly, they are still denying that benefit, and in memorandum as well. Though there is no mention in finance bill that there is an amendment or anything like that. But in memorandum, they have cleverly mentioned that this was the intention of the law, that on special rate of income, 87A won't apply. 87 would not. So that's the same question. What is the income which is maximum amount not for non-filers? RN Merval, sir, can you elaborate your question? What would be the income which is maximum amount not chargeable to tax for non-filers?
We'll have to unmute him, I guess. 1 second. Mm. One moment, sir. Maybe till then you can take the next question.
So
I'll
that
have-
was the only question, I guess. If
Yes,
there
we
is any
just
other
want-
question, we are open for have a there is any. I don't think it is there in the chat. Let me check.
आप नहीं कर सकते क्या?
I'm not able to see any questions other than the 87A and non-filers. Is it there?
He will have to unmute himself. No problem. Probably what would be?
Okay, let me try to explain. Though I'm not able to understand his query. I think he might want to ask what should be the limit of exemption for the person who has not filed the return. So from now onwards, you are not required to check if someone has filed their return or not. That section has already been removed under this Finance Act, Finance Bill rather. So that is the proposed amendment. From this year onwards, it won't be required. So I think that was the question. मतलब, limit was already not there in that section, so you were not supposed to check the limit or whether he had taxable or income or not. It was there for any person who should have filed the ITR and who has not filed the ITR. In that case, higher rate of TDS or TCS was there. But from now on, you won't be required to check that. So I hope that is clear. If suppose I start, what is the question? If suppose I start from so now if it is 50,000, you will have to deduct TDS. So earlier it was annual limit. Now it is a monthly limit. So if it is crossing the threshold of monthly limit, you will have to deduct TDS. It's not like you will have to see it's कि भाई the limit is 6 lakhs, so you won't have to deduct TDS up till 6 lakhs, and beyond that you will have to. It's not like that. You will have to see on monthly basis, and if it is crossing the threshold, you will have to deduct TDS. Any other questions?
Mudit, hi, this is Manoj, and I have a question. So
Please, sir.
if we actually opt for the new regime, because it's a time where those who have been actually using, or those who have been actually on the old regime, now they are considering whether there is a right time for them to shift to the new regime, considering the limit whatever is there. So in new regime, in old regime, a person is availing a lot of deductions, maybe section 80
Right.
on account of health premium, and there are a lot of sections which are available. So in the new regime, is there any such section available, or nothing is available? It's a flat,
So some
tax slab.
exemptions are available. For example, 80 CCD2 is available. If you have paid any interest on your rented premises, if you have rented your premises to anyone and you have paid any interest on it, then you can claim that interest as well. But limited exemptions are there. Most of the exemptions are gone case now. But one thing is for sure, while building all these slabs and deciding the tax rates, government have taken most of the exemptions, and the limits have been calculated accordingly. So you can make a fine comparison of that, and in most of the cases you will find, if despite of not taking any exemption under new regime, your tax liability is lesser in new regime in comparison of old regime. There are some differences to it, or rather exceptions, I would say. If you are taking an exemption under, for example, under section 80U or maybe 24B, for some interest related payments on self-occupied property, then you would find that maybe old regime is better than new regime. But yeah, from last year onwards, if you want to opt old regime, you are required to file form IEA with income tax before 31st July, if that is your due date, or whatever is your due date, maybe September, October, whatever it is, you are required to file that form before that date.
Okay, so there are certain exemptions still there. You are saying that
I would say limited exemptions are
very
there.
limited exemption. Okay.
Yeah, limited exemptions are there. Most of the exemptions are gone case now.
Okay, so government's basically their intention is over a period of time
So
to
what I
eradicate.
foresee under new income tax law is they won't be providing any exemptions at all.
Yeah.
So yeah, we are seeing from their past trend that eventually they have, removed all the exemption subsidies and everything.
Yeah. Correct.
So government is trying to go in that direction where none of their revenue expenditure is towards all these subsidies and exemption related items. So hopefully it won't be there in new income tax law. But let's see. It is going to be a new baby. So let's see what is there in that. Hopefully it is not like the GST law, the way it was introduced in the hush manner, and tech and law should be aligned in that sense.
इंक्रीज वाले पार्ट में वो भी देख
Correct,
रहा हूँ कि
correct.
मैं जनवरी में बैलेंस पार्ट बहुत हाई है
Thanks for
Sorry,
that.
I could not hear you, sir. Sorry.
Yeah, I got your point,
A
Mudit.
certain
Thanks.
point, ये नहीं
There's some bit
12,000 pieces
disturbance because I'm in office.
कर पाऊंगा तो
So,
Okay, okay.
yeah.
उस तरीके का
Any other question? Shefali, I guess we can sign off now.
Okay. Thank you, everybody. If there are still any questions, you can always write to us or call any of us. We'll be happy to address them. So for the timing, thank you so much. We're signing off. Thank you.
Thank you, everyone. Thank you.
Thank you.
Silent actually.